Good evening, everyone, and welcome to another stock review and analysis that we're going to present from the Learn, Grow, and Invest community. I will be doing this presentation today. I should be no stranger to anybody who has seen our reviews before, but for those who don't know, my name is Chike Verwi. I am the resident analyst for the Learn, Grow, Invest community. And today we are going to be reviewing the company Tropical Battery. But as is customary, as everyone who is aware, and for those who are not aware, we are a Bible-based group, investment group. So as such, we always start off our meetings with a word of prayer. So at this point in time, I'd just like to put this meeting in the hands of the Almighty. Father God, I thank you very much for another day, another blessing to be able to have this meeting to reach to our viewers, listeners, etc., to impart a educational session of knowledge on a company and on investing that would help to educate all those who are listening, both new and those who have been here before. We ask that this session will be very fruitful to everyone. We ask that this session will open persons' minds to doing the due diligence that is required in investing. And we commit this session into your hands, dear Lord. In your precious name we pray. Amen. All right. So, with that being said, also another piece of housekeeping that we need to get out. This entire session and everything that we do here is for educational purposes only. Nothing stated here is financial advice. It is only for our educational review, etc. And we ask that if you are going to make any kind of investment decision, please speak with your licensed financial advisor. So, with that being said, we can get to the meat of the matter. And as I said today, we will be reviewing the company Tropical Battery, right? So, how do we normally do this? As most persons would know, and for those who don't know, it basically takes on this format. We'll do a company overview, and then we'll get into the industry or the sector that the company participates in. Then we'll do a review of their reports, their financial reports, both the annual and their quarterly reports. And then we'll take a look at the company's performance with respect to their market price history, and their volume history. And then we close with looking at any kind of upcoming news that they might have, or events that we might have been able to find and see, and then open the floor briefly to a few questions for those who might want to know a little bit further, and we can do a little bit of a review of finding that information specifically or clearing up anything that will be required that was said about, or should I say illustrated about the company, right? So without further ado, let's get right into it. So we're dealing with Tropical Battery again. Let me just share my screen that I've put up for us. So, on the company overview, for what we know Tropical Battery as, we go to their mission. They're basically to provide and promote the growth of safe, quality, and clean energy storage solutions across Jamaica and the Caribbean region. And they do this by empowering their team through continual education on the benefits of sustaining the environment. Their strengths, as they state, is that they have a distinguished history of providing the Jamaican market with world-class service and renowned automotive consumer product brands. Tropical Battery offers over 70 years of technical expertise and service in the energy storage field. They are a household brand that offers a wide range of brands and batteries across the island. So they carry the broadest range of warranties, prices, and sizes, which allows them to continue to support their retail and distribution market by maintaining price integrity in the market. They state that they also have great value or carry great value with their mobile response service. Now, I believe this one was actually pretty new, but yes, this is actually a very good service as well too. Mobile response service that delivers batteries to customers within the corporate area and branch vicinities, right? Further on, they are environmentally conscious, as is stated in their vision, and that has pushed them to be the largest exporter of spent batteries. So those are batteries that have already been used up, island wide. And now the company is embracing cutting edge technology, which they have no doubt will continue to make further inroads in the target markets, right? So that's pretty much the company and what they do. So we know that they deal with batteries. They deal with the use of spent batteries in terms of exporting them. And they're basically a company that is in the market of doing clean energy storage solutions. So when you think of the company or you look to them, while their current market might be in the sales of batteries, etc., anything along clean energy storage solutions that you can think about, this is something that they can possibly get into later on in the future based on their description that they have given. So, moving forward with who they are, so that's basically the company overview and where they sit pretty much in the industry that they're currently in. I will tell you shortly. They are in the what has been tagged because they're the only company currently on the Jamaica Stock Exchange that is engaged in battery sales. However, they sit in the retail industry because they actually are selling the products, are selling batteries to the general public, etc. Right? So they're part of the retail industry, and that's where they sit currently. As to their competition, well, currently there's no other battery company that is there on the market. But in the retail sector, companies that are part of that sector, and also another addition is that they're part of the junior market, so that should also be noted. And in the retail sector, well, they will fall into any of the other companies that you might know, such as Fosrich. Fosrich is another energy company, but they do renewable energy with respect to lighting, etc. And they're more on a broader scale basis with respect to government government battery generation. But actually, they do battery generation as well too for and renewable energy for street lights, etc. So they might be considered not necessarily a direct competitor, but in the same sense of storage, clean energy storage, right, and renewable energy storage. They could be considered, I believe. So that's the sector that they will be sitting in, right, as a comparable with a comparable company to look on. And with respect to where they sit now financially, so where are we at with them in terms of it? So I like to remind everyone where tropical battery is coming from. So let's take a quick history back to where they're coming from. Have up here, this was their prospectus. Pretty much it was delivered in September 9th of 2020, right? And note that at that point in time, they came to market offering us the total of 325 million ordinary shares at a dollar. And that prospectus basically opened on the date was exactly, here we go. Opening date was on September 22nd, closing date was on September 30th, right? So pretty much they then came to market thereafter, and we've had their performance from that time since. So we've already had a whole year of performance from them, from the time period. Their financial year ends in December, if I'm correct. Let me just double check that. One moment. So is it on? No, that's apologies. Their financial year ends in September. Sorry. So right. So the time that they came to market, basically around that time, that's when they were putting out their financial year. And I'm using the GSE's website basically to pull up their audited financials of when they put it out, so you can clearly see that their year ends on September 30th, right, for their financial year. So let's get into it with respect to their 2021 year, in terms of what are we waiting for now, pretty much, coming out from them. We're not going to be getting anything for 2022 just as yet, but we've got some performances during the quarters that we're going to be looking on. So pretty much, I'll start with the audited financials first. Let's do that. Let's see where they're coming from. Let's see what they've done for that particular year. So for the audited financials, for the most recent one that we have, because it's always good to look from that first, is the one for September financial year 2021. And in those, actually, you know what? No, better yet, let us look on their annual report, because that will be better. Audited financials are just going to give us the figures, but there's important stuff in the actual annual report that will be better for us. So I'll go with that. So the annual report for them, this actually happens to be it that I already had at the start. So with respect to their annual report, let's take a look and see where we are. So with respect to how they were doing, I hope you can all see where they are. So something of importance to note: we need to know as investors what the company actually does. Where that dollar is being generated from, right? How it's making that money, for what they're putting out. So as you can clearly see, their composition of what they are doing: 77% of their sales, of their revenue, comes from battery sales. They have 7.3% from battery export, 13.5% from accessory sales, right? And a very small sliver of 0.4% in services and other income, and then another small sliver of 1.7% in tire sales. But the majority of where their money comes from, or where their revenue is generated from, is in battery sales. And we can see, I'll make this a little bit bigger for us so that we can actually see it better. We can see that for their financial year of 2021, their battery sales basically was at 1.5, that's what, $1 billion. So $1.5 billion if we're rounding it up, 1.53 or $1.54 billion, rounding up. And their export sales was 145 million. Tire sales was 34 million, or 35 million if you round that up. Their accessory sales, not bad actually, at 270 million if you round that up as well too. And then even though the accessory sales is just 13%, that's a pretty good amount. And then you have their services and other income for a grand total of, round this up to pretty much $2 billion. If you look on it, if you want to just look on it, because 1.997, right, billion, basically just round that up as $2 billion right there. So going over on their financial highlights, we can see that year on year, make this even more bigger so that we can see. So year on year, revenue has been steadily increasing. 2017, now as you remember, we stated that the company came to market in 2020. So from 2017 to the most current year that they had, which is 2021, you see a steady progression of their revenue, and their revenue growth. And they've stated that their year-on-year growth has been 7%, pretty much. So as of 2021 revenue, this was their best year, and which is a good thing to look on, because noting the fact that we're going through COVID in 2020, notice there's no dip for them. So that basically shows that if you are looking at the company and thinking of it in that way, the company was pretty much COVID resilient, right? In that they still were able to generate their revenue, etc. And what we need to now find out at the end is, did this revenue transfer into actual net income, and more so net profit, right? Which is the final figure that most investors are interested in. So before we jump to there though, we look at the gross profit for the company, which is basically their revenue minus their cost of sales, or cost of goods, the goods that is sold. Basically the gross profit for them, you can also see that they had a nice upward projection and a year-on-year growth, as they state, of 8.9%. You can see that their gross profit percentage, basically their gross profit, this would be their gross profit margin continues to rise as well too. So bodes well for them based on how they've been doing over the years, especially since they've come to market as well too. Taking in that capital from the shares, the 325 million shares that they listed, they continue to perform accordingly, right? We have like things hand in hand, just like how companies make revenue and companies basically have costs of that revenue, there is also other expenses. And like the other good niceties of the revenue going up and the gross profit going up, so was the expenses. So you have the administration expenses. Well, this would be what they call SG&A, so selling, general, and administration expenses. That's what this falls into. Has been on a standard steady rise. But it's a good thing to see though that it's not been on a breakaway in the same comparison as the revenue growth and the gross profit growth, etc. Because it's just 2.4% that has had a year-on-year increase. So in the grand scheme of things, they could do better to bring it down. Just by eyeballing this, but then at the same time, you can genuinely see that at least they're trying to maintain keeping it from getting out of hand. Because note previous years how it had been growing, and then in 2020, 440 to 450. That's pretty much only 10 million additional, 10 million additional added with respect to this gap period of 2020 to 2021 versus a whole 40 million in the gap period 2019 to 2020. So in the grand scheme of things, doing what they're supposed to do, um, from what you expect a company to do in terms of managing certain expenses, and either keeping it low or bringing it down. Then we move to the final part, which is basically net income. So after we've taken out all of the expenses, we've taken out the finance costs, we've taken out things like taxation. Well, they're new to the market, junior market. So for those who don't know, when you join the junior market, you have a tax reprieve for 10 years. And what does that tax reprieve look like? For the first 5 years, no tax, and then 5 years after, half tax. So pretty much company is not going to be paying any taxes since they've come to the market. So literally, they only have expenses, finance costs, and that's it. No taxation for now, for another five. So 2020, they came to market. So for another 5 years, basically, just tack on from when they came to market 5 years from now. So with that being said, you can clearly see that after everything has been divvied up or extracted, they're left with net income before their taxation, which of course they have no tax. So the net income before tax is $88 million. Now, in the grand scheme of things, this correlation of the amount of revenue that they made on a nice upward trajectory asks us the question and delve deeper into why their net income then looks in this way, where it's down, then up, then down, then up, in this kind of meandering. It's not linear, straight, constantly going up. But in the grand scheme of things, though, it is constantly going, it is overall still rising. So year on year growth, as they've stated here, now this is what, 201%, 201.1%. Now, of course, this will look really good because 88 compared to 29, but this is COVID year. And as I said, while the revenue is COVID resilient, there's something that's going on with the income, with the actual net profit. So we need to look on that. And I personally like to review these 2 years and not the one in the middle, right? Everything was impacted in COVID. So this is a better year, and 88 million versus 63 in 2019. This is a good movement, in my opinion, to look on it, just eyeballing it, right? Looking on the other side of things, what we have is a situation where the the we have the current ratios, etc., going on that. And from that side, we can clearly see that with respect to how that is set up, their current ratio, well, we would want this actually to be going up, because this is basically about how they're managing current assets against liabilities, right? Um, but it has been coming down. So we just have to take it as it is. I mean, they did put out the industry average still, which I believe the industry average, more than likely, this is the retail industry. They have it at 1.5, and they're currently above it. And then they've shown how shareholder equity has also been increasing year on year, and how it stands currently at least year on year growth is at 12.4%. So that's a good eyeball of the graphs, right? Taking it into consideration at that point. So if we get down now into their review for 5 years, what do they say that they're looking on? And I like this report because it shows how we can hold them accountable to a lot of things. So let's not get into, we're not going to bother to get into things such as their operating key performance indicators. That's what KPIs stand for, with respect to how their receivables and payables go, and inventory. This is something that I would request everyone to basically go and pay keen attention to as well too, going forward, because this is basically money that they're taking in from sales, and money that they're paying out for their debtors, etc., for purchases, inventory, etc., right? Payables versus receivables. But I'm more going to focus right on this side with respect to what they state about their key financial ratios. As you can see there, and they explain it very well. So their debt to equity ratio, I like this, the fact that it has been coming down very nicely and steadily, and it's now down to 1.1. Their debt to earnings before interest, taxation, depreciation, and amortization also has come down very nicely as well, too, to 2.6. Their debt service ratio, their ability to cover their debt, how many months they can do so, 3.5 times. Now it was a bit higher before. I'd like to see that higher again, but it is actually increasing again, so that's pretty good, to see it on an upward trajectory. And then we have the current ratio, which is how much of current assets is current liabilities, basically in terms of that formula. And it's just 2.9. Well, how much of, yeah, it's just 2.9 times. So I mean, in the grand scheme of things, you have to take it at face value of what you, if this is good or bad for you, right? Based on what you look at. But then we get in there after to their actual financial statements. Now this is a bit blurry, but we'll work with it. Let's see what we can decipher and pull out from this. All right, let's start with their balance sheet, and I hope everybody can see as good as possible. But we will try to work with it. So for the balance sheet, we have that at least for their audited financial year of 2021, really good earnings with respect to putting in their total current assets improved, moved from 1 to 1.3 billion dollars versus the previous year of only 1.04 billion dollars. Their liabilities did grow though, and they grew. Basically, we can look on this and say this is nearly two times, right? So 1.1 not a lot, but nearly two times it has grown. But their net current assets, after you take out basically the liabilities from the the total current liabilities from total current assets, basically you have net current assets of just about $63 million was added basically to it. Not bad, in the grand scheme of things. Growth. But the years before, we actually see that they've done a bit better in the 2018 and the 2019 years. So we'll be looking for improvement for this year on year. Let's see where it goes with that. With respect to you would expect that their non-current assets, now this is stuff like their property, plant, and equipment, is where the bigger money is. And of course, it is clearly seen that their non-current assets has clearly grown very nicely to now where it started off 191 million is now at 426 million, right? And then we saw that the shareholder equity has also grown, coming from 453 million. Now it's basically 825 million. So that's basically two times, where it should have been, or where it was before. So another positive as well too, growth. Put it on a chart. This is a nice upward trajectory. So that's the balance sheet for the year. Now we go to the income statement. And I mean, as the graphs had shown earlier, these charts here had shown earlier. Nice steady trajectory of revenue. And now we get to the numbers that show the same thing. That the revenue, and again, lovely report because it breaks down exactly the sectors that they're speaking about. Scrolling back up to this pie chart, very important that you can see the breakout of where they earn their revenue, and you can see the breakout of where they earn their battery sales money, right? So this here is what this would be. This looks like, so this particular section of battery sales, 77%, right? Prior to that, it was 78%. Prior to that, it was 80%. And I'm focusing on, as you can see, it's a total out of 100% of the revenue. So I like this. I like this breakout. Very informative, very easy to track, to understand, what this company is doing and how you can even project and hold them accountable accordingly. So you see the revenue growth is definitive. 1.28 billion, 1.47 billion, 1.74 billion, 1.87 billion, and now we're at one. As I said, round it up to $2 billion because this is really close to it already. You're just $3 million, or actually less than $3 million off basically to get to 2 billion. So, and then you have the year-on-year growth rates. Might be a bit fuzzy to see because it's a bit dark there, but let me try to bring it up. Year-on-year growth rates: 7.4%, 14%, 18%. Now it's dropped back down to 7.1%, and now it's at 7%. So, you can basically get an average projection of, let's say that this company is going on an average year-on-year growth rate through the years of maybe 8%. If you take an average, right? Roughly, rough maths, taking it out and making a speculate, not a speculation, rough maths, and making a eyeball view of it, on average 8% revenue growth a year, right? Let's be conservative and say 8% revenue growth per year, right? So thereafter, we come down to their cost of their sales. We see how that breaks out as well too. Cost of sales, automotive, on the automotive side, and then their total cost of sales, right? And then from that, cost of sales minus the revenue gives us our gross profit, right? So gross profit is 31% basically in terms of what they're left with at that point in time. At least they walk away with 31%, right, of that revenue. And then at that point in time, if you look, you have the previous years to see how they've been doing. And this is pretty much as good as their 2018 year of the same 31%, but even more revenue, even more gross profit, sorry, was generated. 449 million versus 619. And then we have the other further expenses now that bring us down until we get to the final figure, which is your net income after before, well, it's actually net income after taxes that is done. And as I stated, they shouldn't really be paying any taxes now going forward because of their tax reprieve for the next 5 years, no tax. So as you can see, they actually have a give back, and that's why this is a positive figure, because that's $808,000. This is not in millions, by the way. So it's actually $808,000 that they didn't have to pay. So they get to keep that money for now, based on the fact that they have a tax reprieve. As you can see in the previous years, this is their tax, how much they were paying out of tax. And I believe the corporate tax rate is what, 25%. Somebody can correct me if I'm wrong in the comments. It would be great. Let me know. But that was supposed to be, the corporate tax rate was 25%. So as such, it would be this would be the amount coming out every single time prior to them being on the market. So net income, as you clearly see, there's growth. It was shown in the graph and it's now shown in the figures. And what everybody wants to be concerned about as an investor is the fact of what do they look like at the end of their financial year. And the end of the financial year, they did not have earnings per share because they didn't have any shares out that they would list. But once they listed their shares, the 325 million shares to the market, you've seen clearly that for the year of 2020, it was 3 cents that it was giving earnings per share, right? And now it has improved to 7 cents. So that's basically a whole 100% increase in their earnings per share for the entire year to year, from 2020 to 2021. So that's the income statement. And we move on to the final statement that I like to look at, and that is the cash flow statement. And with that, because at that point in time, it tells us exactly cash moving in and out of the company. And I really like this, and for those who know me, they know that I really like this particular statement, because in times of peril, and it has been proven in COVID, in this COVID situation, companies with cash don't have to come back to market for debt, right? In terms of, when I say debt, they come back to market. In terms of getting, if they need additional capital, they don't have to undertake debt such as bonds, or such as loans from companies, etc. Or they just, and when they come back to market, they might need some additional capital to do some expansion, etc. So having a good cash flow statement and cash at the end of the year balance, one that is improving, bodes well for any company. And I like to see that as an investor, as the investor that I am, right? So pretty much, cash flow statement comprises three areas. You have cash flow from operations, very important for a company like this. You want to see that this company is actually generating cash from their operations, right? The second part is cash flow from investing, and that is how they're basically putting the cash that they obtain or they make to basically improve the business by doing such things as capital expenditure, which is basically investing in the increase of property, plant, and equipment, or they're doing it for other investments such as research and development. This is, after all, a clean energy storage solution company. So anything surrounding that, they would want to be looking into and seeing how they can invest in that. That takes money. So you would want to see how they're putting their cash flow from investing into that. And then the very last part is cash flow from financing, which basically shows how they're paying back their debt, and also how they're paying you, the shareholder. So you'll find dividend payments, etc., on that line, per se, right? So pretty much, let's take a look at their cash flow from operations, and the final figure that we're looking on is this part. So we're looking on this line, the cash that is generated from operating activities, and that's a positive figure. But the previous year it was much better. And that would have been because, simply put, they got a lot of money from the rights issue that they did, right? Previous year before that, before the rights issue, they also had a lot of cash as well too. So looking for an improvement in this, because this has really gone down. So let's see how that goes in the next financial year that's going to come up. I'm going to state that, I mean, in the 2018 year and even in the 2017 year, oof, this was negative. Then they improved. Then they got better. Then they took in the money. This would have helped the money from the rights issue, from coming to market. Sorry, the IPO. Apologies, from the IPO would have helped to improve this in terms of being able to do their expansion accordingly. And then we have them after the IPO money has been put to use. You have basically now, I don't want to say that this is back to normal, but, or should I say back to your regular operations, but let's see how it goes, right? And we'll see further how that works out in their quarterly financials later on. So that's their cash flow from operations. Positive on the same level, even though decreased, it is still positive. Moving forward, we have their cash flow. So we have, at the end, we have their net cash that was provided from the operations. Now this is interesting because this has now gone negative. And why is that so? Because they had to do some interest payments, that was there. So this was deducted from it starts, everything gets deducted, by the way, from the net profit at the very top, right, to get back the figure. So it's gone negative here. I would like to see this positive, because the way how I look on this formula is, I like to see when net cash from operations is positive, net cash from investing is negative, and net cash from financing is also negative. That's basically how I have looked on it. Somebody else they have different ways of looking. So yes. Thanks for that, Simon. In terms of the rights issue, it would actually affect the cash flow from financing. That is correct. And we'll see that when we get down to there, we would see where it comes in because there's actually a line item for that we would see. So coming forward now from their investing activities, let's see what they've done. So they've put to use, they've had investments doled out 50 million. They've taken in proceeds from their sale of the investments of 63 million, and then they've done their, what is this now? Proceeds from sale of property, 3.8 million, and then they've done an investment in a joint venture of $5 million, which they've actually spent money. And then they've purchased property, plant, and equipment of $49 million, basically, right? Year before was higher, 114, and we're left with basically net cash for the investing activities of $37 million being expended, right, being deducted. And then the final part, which you will see, is the how they're paying their finances. So as Simon pointed out very, very rightly, you have basically the areas I'm looking for: proceeds from issuing share capital. Here we go. This is this one, $156 million. We have a loan that was received. This is 2019. So they have a big loan that was received, 300 million, and another one, 100 million. So we need to be looking to see how these things are being repaid. So there's 300 million being received, and then 359 million being repaid, and another 280 million being repaid. So coming to the current year now, they have no loans that they have repaid, at least at that point. And what do they have? Well, they did their dividends. They did $13 million in dividends basically paid out. So the only financing activities that they've had are two things, which is payments for their lease liabilities and the dividends that they pay to their shareholders, right? Giving them a payout of $40 million for financial year 2021. And what does that leave us with? Well, pretty much you have a net increase or decrease. So it's actually, for a net decrease, this is going to be a decrease of $88 million. So what are we looking at against? Basically, we're looking at what we started for the year, which is this figure carried over here to 2021. So they started the year with $262 million, call it 263 if you round it up, $1 million in cash. And then by the end of the period, or end of, which is the year, 12 months, they ended up with 173 million. Pretty nicely capitalized at the end of the day, still with cash. $173 million in cash to move forward. Now, having something like this as well too allows them to do other things, such as pay another dividend. So pretty much, I mean, this is just a nice positive for the company. And if you put this on a chart, you can see, I mean, yes, meandering, but still much better than it was in the first 2 years of financial statement information. And in the grand scheme of things, this is after all of the IPO money and so forth has been kind of basically removed. That they have this cash, they have a good cash balance, you know, and that bodes well, basically, you know. So from there, that's the audited. Um, we have, let's see, what else would we look on for this one? I'm gonna keep it not going into the, as I said, we'll stick to the financials for the audited financials. So for the audited financials for the annual report of 2021, pretty solid, in terms of how they've improved. And now we go to look on their most recent quarterly statement. So before we even get into that, let's actually establish that we stated already that their financial period is, for the year, is September 30th. So they're not going to have another audited financials until way down in September, then 60 days after that if they're doing the actual audited financials. So pretty much September, October, anywhere between October to November, right? In that time period. So we have to now look on all of the quarterlies that have happened after September. So where are we at right now? The most recent quarterly that is on the system for Tropical Battery is their first quarter, which ended in December 31st, 2021. And that was released on the 10th of February. So we're going to be taking a look at what that performance is currently and how it's looking, because now what we are expecting is their Q2 performance, which should be coming out in anywhere around No, to me. Um, if some of you who have David Rose's calendar of financials, when companies are supposed to put out their financials, it says 15th of May. So if it comes out at that point, it's anytime before that, but it should be at no later than that, basically, unless they say otherwise. That is delayed. But looking on the Q1 that we have, let's see how they performed. So this is their 2022, and I like this is because we're going to be looking at, well, once again, this is 2022 for what it is, but it's the quarter for December 31st, 2021, and it's going to be compared to the period of December 31st, 2020, which is the COVID period. So I think I might actually decide to open up one more quarterly if I'm looking on this particular, and that would be their quarterly for the year. Do we have it? Let me see. No, that's fourth quarter. Okay, this is unaudited, right? I want to open this one up. Why? Because I want the 2019 period to have a better comparison. Well, at least as what I believe is a better comparison of how their performance is pre-COVID. So what are we looking at here? Now they have some niceties at the top of the statement. They tell you that the revenue is up. So we're looking at the current one though. This is the current quarter, most recent quarter that they've put out. So they're telling you that revenue is up 662 million, is up by 46%, 46, 40, call it 47%. Their operating expenses are also up. That's by 10%, marginally. Their earnings before their interest, taxation, depreciation, and amortization is up 137%. And their net income after tax is up 197%, and their earnings per share is up 99.7%. Now, why did I open the Q1 for 2020 for you, for everyone to see? The reason being is because this and all these figures are certainly going to look nice compared to their 2020 year. That's because if you look on everything that was the prime time of COVID, and to get a better view of what I like to deem true performance, I would prefer to look at 2019. So let's see how it really did stack up at that point in time. So pretty much, just gonna gloss over this for a bit. I'll come back to it in short order in terms of because we need to read the notes in terms of the financial outlook, and we have a little bit of a blurry graph, but we'll work with it. Let's see where we're at. So pull up the same thing on this side. It's a bit better, so that's good. You can see this part now. All right. So now this is Q1 2020. All right, and then we have no, we do not have 2019. Do we not have 29? No, we do not. All right, so it's gonna be a bit difficult. Let's just see if we can. No, we don't. We definitely don't. So we're not gonna be able to pull it out because it's gonna be the same thing that they're actually showing back. Yes, it is pretty much the same thing. All right, gonna have to use this one then. So this is a bit blurry, and I'm hoping everyone can see. Well, we have the audited for the year. So this is the full financial year. And then this is the unaudited period. So first quarter, 3 months, right? So focusing on that, right, we are going to see how they have performed. So audited for the entire year, $1.3 billion, right? And we see that for their unaudited, just for the first quarter of 3 months, the first quarter, 3 months of 20 of the what would be the 2022 financials, they're already up at 1.6 billion. So they've already basically improved their current assets overall, right? Adding on a in just a quarter, basically, right? So one positive already. But the liabilities did the same. So we have 448 as the audited, 679 as the unaudited, and you note that this is nearly these two figures in a comparison of the year before is nearly double, right? whereas their current assets didn't go up by double. Close enough, but not by double. But anyway, going forward, their non-current assets, another improvement as well. The first quarter is $1.35 billion versus the whole year for 1.3 billion of itself. So I mean, already looking good in terms of just the figures alone, right? The company has been doing some good stuff in the balance sheet at least, right? Shareholders' equity has nicely improved as well too. They've already made in the first quarter, they've already made the entire year's audited financials. And again, we take this though with a grain because it's unaudited, right? So everybody must remember that. So we have to wait until we actually see the full thing of audited financials, what it looks like. But if these figures are correct after the auditors get through, that's pretty good, right? In terms of the shareholder equity, it's actually phenomenal when you look at it in that manner, right? Looking at the liabilities for the non-current liabilities, pretty much stayed the same, not bad, right? There's no real increase. That has, as a matter of, that's not true. It has actually decreased, right, for the long-term liabilities in that first quarter. So let's see how it goes down overall. We're moving on from there, and we move on to their profit and loss. So this is the income statement. We see what kind of revenue has been generated, and we have the audited for the entire year, $619 million in terms of gross profit of sales that was done, and we have for the Q1 period 196, but it has already beaten out 2020. I'm so sorry I don't have the 2019 of itself. As a matter of fact, maybe we can look on for that. Let's see. If we look on the audited 2019 period, let's look on that indeed. So let's look on the income statement. Audited 2019, the full year. Full year 2019 revenue was $1.7 billion, right? And for the period of just Q1, they've made 190. The revenue is 662 million just in Q1 alone, pretty much. So let's see what they do going forward, right? It's pretty good, much better than the year before in terms of the comparative year before, unaudited at least. So we'll see what that looks like. Um, yeah, and that's going to be the next thing as well to put out. So it's not tricky. It's not tricky accounting. It's just something you must be aware of. Things can go into an income statement, and Simon is pointing it out very nicely that things can go into an income statement that are not necessarily actual cash, right? A company doesn't necessarily have to record actual, or should I say, when they put the revenue figure and the final net income figure that you see there, it doesn't necessarily have to be actual cash that was done. Where the actual cash figures are being extracted from is in the cash flow statement. That's where you genuinely see what is going on. And Simon points out very nicely that the inventory balance has grown massively, right? So they've stocked up on inventory to sell. And what needs to happen now is how do you basically correlate that? The correlation to the inventory I would like to point out in the way how I would look on it is basically their receivables figure, right? Because if the inventory is going up massively, then well, they have to pay out. That's the next thing too. They need to be paying out. But you want to be seeing that receivables figure as the inventory starts to come down. Right now that the inventory figure is massive, as the inventory starts to come down, you want to also see that receivables figure if they have a very large receivables figure coming down as well too. You don't want to see that going up because if the receivables figure is going up, it means they're booking sales that they're not taking cash for. So we basically want to keep a very close eye on their inventory and see how it's moving. And that brings back to the point of why the days receivable figure that you saw in the audited financials that we were looking at could be gleaned as very important because it will tell you how their what is called their inventory turnover is happening. All right, and it's there right here. You see the days inventory and the inventory turnover ratio. notice that it has dipped from 4.3 to 2.3. Let me make this bigger so you can see, but this is on the yearly chart, right? I don't think they do that on the quarterly one. So you're not gonna see that on their quarter. No, there's no chart on their quarterly one. So you're not gonna see that. You'd have to calculate that yourself. But it's something to take note of, that since their inventory has massively increased, you want to see that that inventory starts to come down. One, and two, that as the inventory comes down, their receivables also comes down and it's not growing as well too. I pay keen attention to that because, again, booking high receivable numbers increasing means that they're making sales, but they're not cash sales, right? So you want to pay attention to that going forward. So back to where we at though for the unaudited statement of itself. We clearly see that they're at least stating that they're generating revenue of figures 196 million. We see that they have an operating profit of 81 million, which is extremely ballooning the previous period of only just $32 million, right? And then they've taken in a minuscule. Other operating income is 2.5 million or 2.6 basically, in comparison to 3 million, minuscule in the grand scheme of things. So the profit before tax, right, PBT, as they call it, is 84 million unaudited for the period, better than the year before, and basically close to half the full audited year, basically. So let's see how that plays out for the next period that is there. So they've got other things that we need to be looking at as well too. We need to be looking at finance costs. Their finance costs have increased by $2 million, basically moved from 13 million or 14 million basically to 15 million. Well, actually it increased by, let's call that, yeah, that looks like that's just under $2 million, right? So that finance cost has increased. They've gotten finance income, but it has decreased in the compared to the previous period. So their profit before taxation, at least, and this is the PBT, sorry, this is the PBT figure, apologies, is basically 56 versus 19. Extremely good in the grand scheme of things. And as we stated before, we made clear, because it's a company that is now new to the junior market, still in its grace period years of 5 years, they pay no tax. So henceforth, no tax line. So all of that profit before tax becomes actual profit for the period. So that's $56 million booked as their profit, basically, right? And as such, with this very nice looking profit for the year, or sorry, for the period, for the quarter, apologies, you note that in comparison to the previous period, they have doubled it over. So this is a 100% increase on the EPS right now. So as it stands right now, for the first quarter, for the current financial year that we are reviewing, it has grown by 100%, right? So expectantly looking forward to see what they're doing in the next review that is coming up, to see if they can maintain this or improve it, or if they've lost out on something and they have decreased. It has decreased. So next up we have their equity changes. Well, this one, I mean, we pay attention to this because this tells you basically if they're gonna pay they've paid any dividends. So far not yet for this period. So the last dividend was paid around. So we have a dividend booked within the period of last year. Now we need to find out when this dividend was, but we can look in the financial the audited financials to see when that was, to see when we can expect reasonably a dividend to come. But at least we know that there was one dividend that was paid for the year. So looking out for one dividend at least for this year. Let's see what happens with a more improved change in equity, shareholder equity, right? Basically, we move from at the start of 2020, or should I say, for the financial period that ended 2020, they had 119 million in shareholder equity, and now we're all the way up, at least at this point, up to 266 million, right? So pretty good. Let's see for those who are shareholders of Tropical Battery. Let's see what you get as your dividend when they decide to pay, and then we get to the actual cash, the actual lifeblood of the company, as I call it. moving in and out of the company from their operations. We now see that once again we have net operating activities, a bit blurry, but it's again negative. Um, as it stands, though, in terms of looking at the company's actual operations, we can see that they started off at least positively, and in terms of what they did, paying out such things as taxation expense. They didn't have that, sorry, but depreciation, got back money from that. They had to do their interest on their loans and so forth, interest income, taking that away for things that weren't generated by operations of itself. They at least had $84 million at the point in time, better than the 38 million before. And then the things that actually do change their working capital, which is basically the things that they do to actually generate the revenue, like that, as Simon pointed out. Notice the inventory figure has basically moved from 134 and has gone up to 264 on that point. And then we have their payables also increasing as well too. So pretty much at the end, when they're done, their net cash from their operating activities is only, well, it's a negative 22. Before it was worse, it was negative 90. So pretty much I'm gonna take that as a positive, right? Um, yeah, I would take that as a positive, that the number is trending towards a positive, basically. And in the overall grand scheme of things, it was a negative 11 million. Then we have the investing activity in terms of what cash was doled out for that. Once again, the only thing that was done this year, or this period, sorry, I keep saying year, but this period was just the purchase of their property, plant, and equipment. Another $8.8 million doled out to do that, right? And then we have their financing activities. They did their payments for their leases, at least for the period, right? So as they go on, they'll make other payments, and we'll see all of the payments that they'll be made for the financial year when we finally get the actual audited financials for the year, or at least by the time we get as well to the fourth quarter information, because that's actually an entire financial year. It will be unaudited, and you can actually see that it was there. They did one for 2020. Here's the fourth quarter. So that's the entire financial year pretty much, but it's unaudited, right? And this would have the entire financial year and then the last 3 months of the financial year of itself for you to do a comparison of how they've either improved or not improved accordingly. So back to the final part of the cash flow statement for the period, which was that first quarter. What is the cash like? Has it improved? Well, no, it hasn't. Because in the period before, which was 2020, it started out with 262, dropped to 164, and then in this period, it started out at 173, which was even less. While being more than 164, but dropped to 173, and now it's at 144. So their cash is coming down, and we will see where they end up at in the next review of the next quarter of the Q2 report that comes out, right? But they're putting their money to work still all the same. So we need to see at least no loans. We don't see any loans being undertaken right here. And we saw in the at least in the period of the balance sheet, scrolling back up in the balance sheet, we see that their non-current liabilities are coming down, right? So yeah, let's see what they do in the next reporting period. So that's basically a look at both the annual and the quarterly report for the period. So annual report for 2021 and the quarterly report of the Q1 for the 2022 period. Let's see if they have any notes. So I did say we needed to cover that because that's very important, guys. Very, very important. I made that very big. So let's look on their outlook. Very important in terms of what they at least had said 3 months ago. They said that with our more than adequate levels of inventory, we see a bright year ahead. So as Simon's pointed out, they took in massive inventory. Now they must have been preparing for, and we do know, let us actually establish that we have a shipping issue that was ongoing. Now shipping prices have come down, but at the point in time when this was developing, we had a serious shipping crisis that was developing with certain things. Export, on the other hand, would have been very favorable for a company like them in terms of doing their exports, But whatever was required to basically make those batteries in terms of having them that raw material, if it had to be coming in, then stocking up in an inventory to basically stave off the shipping supply issue would have been one of the reasons you would think that they would have done that and ballooned the inventory up. So going back to the outlook, they are currently expanding their top selling retail store located on Grove Road, just off Halfway Tree Road in Kingston, and that will allow them to increase sales and at this location even further and achieve higher profitability, given that retail margins are better than our wholesale margins, while offering greater comfort and convenience for our team members and customers with a substantial increase in square footage. And we plan to increase our retail presence island wide in coming quarters. What this tells me, or the question that comes out from this for me, is simply this: I want to now know, did they break down in their audited financials their sales by distribution area? So, for instance, this particular store, is it there in the audited financials? Can't really say because I haven't looked on it in that way. But if it is there, let's look and see. It would normally be in the notes when we look on the notes to see the actual breakdown of the stores of itself. And is it there? Let's see. This is in the audited financial report. I would be expecting to see that. Sales by store. I don't see sales by store. So that's something that I would have liked to see because then I can hold. All right. So let's see. Note 18. Note 18. And this is going to show the screen running across. Don't mind this. But I'm looking for note 18 because I'm specifically looking to see if they broke out store by store revenue. And note 18. Note 18, page 37, says gross operating revenues represent invoiced value of sales, but there's nothing else. So, unfortunately, we don't get a breakdown of each store. We only get breakouts of the type of sales that they do, but it would have been nice to actually see a breakout of each store, especially since you're making a statement in the, or they, not you, but they're making a statement in their outlook specifically saying that their top selling retail store is Grove Road off Halfway Tree, and they expect that particular store to increase sales at the location even further to achieve higher profitability. Those are the things that I would have liked to see, and want to see from them, basically explained in more detail, basically, in their financial statement. So hopefully maybe that might come out at some point in time in their audited financial statement because the more information for an investor, the better, right? We want to be able to track these companies and hold them accountable accordingly. And we want to know exactly how that money is being generated. If you make a statement in your outlook that X store does this, then show us a chart that shows exactly which store has done what so that we can see how the improvements are coming along. All right, so that's the outlook for that. Further on, they say that they continue to evaluate the acquisition targets and new organic growth opportunities to expand our product and service offerings into new verticals and geographies against the backdrop of strong growth in our core business segments. So, as I said, I don't like this per se in terms of the other part of the discussion. Why is that so? Because all of this information is being compared to a period. Well, this is fiscal quarter 2022, so this is actually not. It's where it's being compared to. Um, it's still COVID in terms of as you saw before, the period that is being looked at is still December 2020 versus December 2021, right? So when I'm seeing what they're about to talk about, which is all of this stuff here in terms of their financial position, how they improved, material changes, they've stated that the balance sheet was increased with inventory of 101% with a 440 million increase, which was 101%, receivables up 34% by at 101 million, etc., etc. As you're clearly seeing, They state that these increases allow us to ramp up orders, increase our inventory, deal with the current growth in sales, and at the same time avoid and as we did know, we were having that shipping disaster, as I call it, that was developing or had developed at that point in time, where those shipping prices are just skyrocketing, right? So they stated clearly, avoiding any shipping or transportation delays, which we experienced in previous quarters, right? So, I mean, take this as it is, it's unaudited. Let's see what happens in the next quarter. If all of this that they've stated, especially the inventory increases, has bode well for one, sales increasing, and the inventory now started to come down because they should be getting rid of the inventory now. They need to be making sales. If they're making actual sales, inventory should be coming down, sales should be increasing, receivables should not be going up. Right? That's the next thing too. We want cash sales. We don't want IOU sales basically. So we want to see that we want to see that there. So pretty much that's it for the financials of itself, where we're at with respect to audited quarterly. And now we go on to basically the last part, or the second to last part actually, which is actually very quick. We look at the price history of the company, and this part is the interest of the traders, pretty much, because as I said, there's no projections or speculations about this. We're taking all of these figures at face value. So this is where we're at. This is again the GSE, and the I found a little neat trick actually. If for those who want to easily track, you can easily just put this URL inside of, save it to Notepad if you don't bookmark the site, and easily when you copy and paste the particular company, all you need to do is just make this nice little change here where you see the company. This part right here is the company's ticker, as they call it. Just change it to any company that, as long as you know the ticker, and you quickly get it. Or you can select the stock from here as well too. But I find it was quicker to just simply just make the change right there, paste it, and make the change. So we're looking at the most recent. This is today, updated today at 2:30 for tropical battery. And as we can see, over the last 3 months, we've had a steady increase of the price on the long chart, of it going up. It's now up closing today at 266, but and 266 with a total volume of 1.3 million units being traded, either being sold or bought. Now, everybody that knows this is just one chart. This just tells you price action, and this just tells you volume. The chart you really want to be actually concerned about, to actually tell you if that was up or down, was the candlestick chart, because in a very simple nutshell, colored charts mean that the price closed lower, right, than it opened, and white charts mean that price, or white sticks as they call them, I'm sorry, not charts, but sticks, they call them candles, right? So white candles mean that the price closed higher than it opened. Colored candles mean that the price closed lower than it opened. And when you see things that are very close, the candles that have the price close together, or there's no coloration, whether it be white, or there's no body, they call it the body. This part between the upper and the lower is called the body. If there's no body, it means that price opened and closed. So let's take this one. Price basically opened at 262 and it basically closed at 262. Right? Now, I like this chart more because this actually tells me more about not just trading, but the investor sentiment. And if I'm looking to make an entry into the company, it tells me how the investor sentiment is feeling. So this was over the last couple of days, price going up, investors being very bullish, as they call it. So these are the white candles, and then this is called a period of indecision, where the close price and the open price come back to each other. And now we see that the next candle thereafter, even though the price is still up, it meant that, boy, some of the bullishness started to wear off. Persons decided that we could close tropical a little bit lower. So they closed at 265, even though they opened at $2.70. As you can see on the candle, if I pull it over there, it says they opened at $2.70 and they closed at 265, and they got as low as $2.50 for the day. You can clearly see, you can see that as well, but what you don't see is the how low the particular price got for that day. That's very important because it can tell you if you're able to pull off, you can actually pull off maybe being able to enter, or it actually tells you where you can exit as well too. You know how that price is moving in that band. And then also we look on the volume for the day. So the volume of itself on that particular time, total volume traded was 1.325625. On this one, it is stating, or this is actually stating, and it's stating the same, right? So that's the total volume that was traded for the day. Um, Forward from that, I mean, as I said, the general trend over the last 3 months is up. The general trend on the 1 month is meandering. I won't call it flat, but I would say that has the price broken its highest point? Let's see, 3 months. The highest point that the company ever went to was 275. Am I looking at that right? Let's see, 1 year. Let's go all the way out to 1 year. And the highest that it went to is 275. So the price is actually getting back closer to, it opened at nearly close to its highest point for the point. So let's see where it goes tomorrow. I mean, for those who care about that, they'll see where it goes tomorrow. But as it stands, that's where the volume is. So that's the price history, and that's where the volume is right now. And then we have, of course, we have their last performance that they've given, at least for 2021. We have their quarterly earnings. As we can clearly see for 2021, in terms of the Q4 in comparison to 2020, they did much better. So this basically correlates to what we just went through in terms of the what you call it there, in terms of the financial statements that were seen. And then you have the annual earnings as well too, and as you can clearly see, that has been better. So let's see what news we have. Basically, is there any news, any new news that is there? So we've got a AGM. This was in March. I don't want to, let me open that in a new tab. It's the latest news. So they have their, well, that was in February. So this definitely has gone. Yeah, that was held on March 4th. So that's old news. The latest news was their corporate governance policy. I don't wanna lose that. 1 second. So their corporate governance policy was the latest piece of news that they have. And what was this about? Let's see if this was any, could be boring stuff. Yes, introducing the board of directors, something you want to actually look on because you want to know about their corporate governance policy in terms of what they're doing, what the board is responsible for. This is just good investor prudence, right? Just prudent investing. It's not only about numbers and figures, it's also about, and that's the quantitative side. It is also knowing the qualitative side as well too. And this is the qualitative side, right? In terms of how long board members serve for, etc., and who they are. This is basically what they are. Should be known, basically, right? To know. And you need to be reading about the company. But let's see if we can find any more recent stuff about them on the new stuff. So now what I'm going to pull in is something that I use for my my news. It's called my news curator. So I'm going to try and pull it into this page. 1 second. Here we go. And I'm going to search for anything relating to the Jamaica Stock Exchange. So tropical battery. And let's see what comes up. Tropical battery. And we might find some newer news than before. No, there is nothing new that is currently there. The most new stuff is the corporate governance policy being pulled. Let's see if, well, this is in my feeds. Let's see across the web if there's anything new. We might glean something. We might see that they stepped in. Well, here we go. We've got stuff from IC Insider again. In terms of what the price. So we see that the price had traded today. Let's see if we can find where we found that. So tropical, and here we go. Record high, traded at its highest point of $2.85 today before pulling back. Right. So it has actually broken its highest trading point, as they would call it, their highest trading price, right, or what they would call their resistance, their ceiling. It's broken that and it's pulling back. So that's for the traders. And that would bode well for them. And also the investors, I guess if the price is going up, it could be anticipation for the report. In that we've just gone through this now, and we've seen that they've been doing what they're supposed to do in terms of performance. So it could be preparation for what the next report is in terms of people willing to buy at X price accordingly, and also persons selling and taking their profit accordingly, at that point in time. So yeah, so that's that for the aspect of the company price and news, and the last part and latest news. So pretty much we don't have anything new for them, so all we have to do right now is wait for whatever else is coming out from them as to what they have going on, because yeah, we don't have anything there, nothing in the news that is recent in any kind of way relating to them that I'm seeing within the last how much ever days. So we'll leave that at that. So yeah, that's tropical battery. So with that, I am basically going to open up for a few questions. Let me just check the chat um, and see any questions about what we've done, we've reviewed here, and also maybe any comments as well in terms of what you'd be looking for in the company, what you're hoping to see. Again, everybody knows me. I'm a long-term investor. I'm a medium to long-term investor. So quarters don't interest me really at all. If I've, and fair disclaimer, I don't have any tropical battery. But if I had already stepped into this company, it would have been a long time when the price was pretty much down at this very low point, right? And I would have had a much longer time horizon accordingly, just because that's the kind of investor I am of itself. Um, Matthew, I am not aware of Enervate, so I'm gonna have to look that up. Explain what that is to me a bit, and is it related to tropical battery? Because I don't know about that. I've not heard about that one, to be very honest. So I'll have to go look it up. Let's see if we have any other ones. So and well, Matthew, you had asked about this the 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 well, yes, the negative cash. We did see that it has improved, at least for the period that it has started to. The negativity has not been a larger amount in compared to the previous period of the negative 90 million. It's now down to negative 20 odd million, and coming down even lower, and hopefully it's coming down even lower. So I mean, bodes well so far as it stands, right? um Joint venture between Tropical Battery and is that CAC is the AC persons, right? So I don't remember seeing that, and that's interesting because that news, again, news like that with partnerships and stuff. You did see that they talked about having about doing their expansions accordingly. That's what cash is needed for, to be able to do stuff like that, R&D and so forth. So I mean, people take news like that as a positive. All we can genuinely do is see how that translates into actually being an improvement in sales. I mean, at the end of the day, let us not fool ourselves, and understand and recognize, sticking to the company's chart of where revenue generation comes from. I would like to basically make it clear that all the niceties that a company loves to do pales in any comparison to how they actually generate revenue. Revenue is generated by Tropical Battery, by battery sales. Until those things change, then this pie chart must change accordingly. So all of the niceties that they're doing with respect to partnerships with Enervate, etc., and so forth, Matters not if the main thing that they're doing for revenue generation is battery sales, as you see on the screen right there, right? Um, Tropical and the continued increase in energy prices. That's actually a very good question. And if I think when we did stocks to watch, when we did one of the stocks to watch, when we did speak about tropical, that was one of the things that again I found as a positive. With increased energy prices, with respect to we know what Jamaica is. Jamaica is a price taker for electricity. And the primary thing of electricity prices in terms of everything is about fuel, right? While it has moved from heavy fuel oil over to LNG, etc., and so forth, and we are still tethered hook, line, and sinker to JPS, and every business is tethered hook, line, and sinker to JPS accordingly. So, such things as tropical battery going out, and as it clearly states, this is what the company, I remind everybody again what the company is a clean energy storage solution company. That's batteries, that's anything like that. You can genuinely see them going in and supplying. We have, again, we looked on their part of the retail sector. Company that is similar to them is Fast Rich. They do renewable energy as well too, with batteries as well too, and so forth. They have a contract with the government for street lighting. If Tropical is supplying these batteries and they're dealing with spent batteries and they're doing these battery sales accordingly for solar energy, for instance, right, to homes, to businesses, etc., where they can reduce their costs for things like AC burn, like in the residential section is ACs, or fridges, etc., high power fridges. And that should bode well for them in terms of, once again, battery sales, right? That's how I look on it. That's where I want to look on it. So if you see that, because again, we're about to get hit with gas prices going up again another $3. Everybody's going to be screaming in short order about electricity going up again in some kind of way. For those who can come out, alleviate this pain by going solar in some kind of way, and adding that, then how these batteries fit into the grand scheme of things could be positive for them, right? So yeah. All right. So let me just check in. So as long-term investors, uh, renewable energy is my thing in general, but I had a grouse about new companies coming at the end of the day. And that's another discussion in terms of another company, and I don't want to bring it up. But yeah, Tropical was not on my list. I'll just leave it at that, right? Props to everybody that got in, but Tropical wasn't on my list, right? So I could easily, if I step in, it could be much later on, and that's fine, as I said, because my trajectory is much longer than just trying to get in and get out in 6 months. It's way longer than that. So for me, buying tropical at the right price is more important when I'm convinced that I want to step in. And that's where I leave it at. Outside of that, I have no reservation or comment on tropical of itself, and looking to hold it or anything like that. Yeah, no, we're not gonna even go there. That is clear speculation, Matthew, in terms of tropical. Yeah, getting bought up, but that would be clear speculation. So we'll leave that one alone of itself. But let me see if we have any other, because Matthew has done, he's given some good questions though. Let me see if I can see any other comments that are on of itself. We have any other ones there? So it would seem that those are most of the comments in terms of what people are looking for tropical. So I mean, with that being said though, hope this has been informative. Please, as always, I mean, we want to reach as much persons as possible, to educate them as possible. And more so, the takeaway is not just tropical the company, but as an investor, what some of the things you should be looking for, and not just looking at price action alone. And what happened today in terms of the price going up, price going down, that's gonna happen. But if you're the investor that you're supposed to be, with time horizons and goals, etc., you're purchasing companies, not a stock ticker. I like to always say that, because that's me. as an investor, and I would and as a better investor, you're not a trader, and as a better investor, you're looking at the company itself and understanding the company, right? So pretty much, hope that this has been extremely informative. Please, of course, like the video so that we can get a wider reach, wider audience to educate more persons about it. And also, please join if you want to further engage the conversation. You can also find us on we have our Telegram group, and we are also on Twitter as well too. So would encourage you all to join our Telegram group and the Twitter group as well too, if you're not already members, for further engagement. And also we're on Facebook, and there's LinkedIn as well too. But I find a lot of the engagement, there's really a lot of engagement in our Telegram groups. So we're when we do speak about the companies of itself and wanting to know more about the companies, the questions will be answered accordingly, in that manner. And bright minds, very bright minds in the industry and so forth are part of the group as well too, that always that chime in. So for your investor educational knowledge and improvement, in becoming investors for life, not just investors for next 5 years, 10 years, etc., but investing for life, because that's what investing is. If that's your true goal about investing doesn't have to be an everyday thing. It could be every week you're looking at the market, or every month you look at the market, or something to that effect, depending on what kind of investor profile you have. You need to know that, right? So yeah. So again, hope it was informative. I thank you all for spending the time with me. We've gone over 26 minutes. So yeah. But hope you guys were duly informed. And we'll see you next time on the next review. So take care for now. All right. Bye guys.